Good morning, everybody. Welcome to Moving Home with Charlie. I'm Charlie. This is the Mortgage Misery live stream. Let's get straight into it. It's only been barely 48 hours since I did my last live stream, which was Mortgage Dilemma. And in that time, the mortgage market landscape has, to all intents and purposes, collapsed for new mortgage business. I'm going to try and just play you a clip from BBC Radio 4's The World at One yesterday when the head of residential research from Savills was being interviewed. Just listen to this very short clip, which by the way, there's a link in the YouTube description to this so you can listen to it for yourself. I don't know if it's going to work. It's just a few seconds. Please listen carefully.
Are we in for a big increase in repossessions?
I think you're going to see a big increase. You're going to see an increase in repossessions. How big it is really depends on some of those things that we have already talked about. So a lot of it will depend on how lenders respond. And I think they learnt a lot from the experience.
My whole reason for the YouTubing campaign that I've been doing has been to try and give as much early warning as possible to people who are at risk of negative equity, because the more time you've got to be aware of it, the more time you've got to prepare for it and hopefully avoid it. And as you just heard him say, there is going to be an increase in repossessions, right? That is people losing the homes they have bought. By the way, Savills, right? Savills is an estate agent. So I'm delighted that an actual estate agent is putting their head of research on the radio and is allowing him to say there are going to be an increase in repossessions. So people are, I urge all of you, so go to the link in the YouTube description where you will see a link to that interview on The World at One yesterday. It starts at about 14 minutes in, I think. People are very scared, and the thought of losing your home is very scary, and it's already too late for some people. And what I've been campaigning to do, and actually especially in the estate agency world, where so many estate agents have been in complete denial about this. No, it's all fine. The fundamentals are good. It's all right. It's a bit wobbly. Prices are leveling off. No, it's total chaos out there. So this story was released on the Financial Times website last night. Let me share it with you on the screen here. HSBC, Santander, and Nationwide suspend and reprice UK mortgages. I'm just going to read a couple of the excerpts from this. A link to this article is also in the YouTube description. Okay, so basically, to all intents and purposes, all the mainstream mortgage lenders have suspended they've suspended their fixed rate products and are basically closing the doors whilst they have a recalibration. Banks that were still offering new mortgages on Tuesday morning, including HSBC, Barclays and NatWest, were being deluged with demand, according to brokers. Aaron Strutt, a broker at Trinity Financial, said, "One of our brokers is an online queue to submit an application to HSBC, and there are 683 others in front of him trying to do the same thing." That's not 683 home movers, that's 683 brokers in a queue trying to submit an application. So for the moment, there are options for borrowers, but we need the other lenders to come back into the market. Otherwise, they will receive too many applications and they will pull out too. This to secure mortgages tomorrow. I think it's already too late. I think that race is already. So almost 300 mortgage products were pulled from the market overnight on Monday night, according to the data site Moneyfacts, including Halifax, part of Lloyd's. Santander said it would be removing 60% and 85% loans for new customers. Okay, bye-bye first-time buyers is what they're saying. Customers who have already applied by this time will not be impacted, it said in a statement. Okay, I don't know if I believe that. I think what they're saying is, if you have applied, don't give up. Like, we'll still give you a mortgage, but let's just have a talk about that. Nationwide said it was increasing its 2, 3, 5, and 10-year fixed rates by basically about 1% from Wednesday. That's a massive, massive jump. Anyway, you can read that article yourself. So what does all this mean? I think also mortgage brokers have also become a bit overwhelmed. And the truth is, the brokers, who are the intermediary between buyers and the lenders, are frankly not getting answers from the lenders and can't get through to them themselves and don't know what's happening. So what we're looking at is the highest levels of uncertainty in the mortgage market, let alone the economy and everything else, and the budget, that kind of stuff, the highest levels of uncertainty that we have seen at least since the 2008 financial crisis, and probably going back to the 90s. And if we're not there yet, we will be soon. Because, guys, look how fast this is unraveling. It's Wednesday. This time last Friday, so 5 days ago, he was just announcing, in fact, he hadn't yet started announcing the budget. And most of this is happening as a result of that budget, but that's not what I'm going to talk about today. Although after this live stream this morning, I am going to be recording a video, not a live stream, but a video to put out on my YouTube channel about the budget and what it means for the housing market. So uncertainty effectively means a lot of people in the housing market, the transactions are going to, not all, but a lot, are going to grind to a halt. If you've already got your formal offer from your mortgage company you're about to exchange, there's no reason why that can't proceed. You may or may not want to proceed, but there's no reason why it can't proceed. The group of people, I think, who are probably in the most worrying position are people who have just bought with a 2-year mortgage, 2-year fixed rate. So if you've bought recently, if you've bought this year with a 2-year fixed rate, or you have a fixed rate mortgage ending within the next 2 years, I'm afraid that I think you guys are the ones, especially with a high loan to value, are the ones who are in the group that's most at risk of negative equity. For reasons I will go into in the other video later, I think in the coming year or two, we're going to see very large numbers of job losses. And that's the perfect storm that leads to repossessions. So mortgage rates going up, incomes going down, fixed rates coming to an end, means that people are going to be in a home that they've bought with a mortgage that they could afford when they bought it. And when they bought it, they had no prospect of expecting to lose their job. They didn't know that the cost of living crisis was upon them, or how much energy bills are going to be going up. And if you listen to that World at One interview from yesterday and go to the beginning in the program, there's an interview with a guy, which is really a heartbreaking interview. He says his fixed rate's coming to an end in 9 months' time. He's in a house with his family. And he said, I just don't know. I've just got no idea how we're going to be able to pay our mortgage. And he said, it's the only home I've ever owned. It's the only home I ever am going to own. And I don't know if I can keep it. It's a really heartbreaking situation. To anyone watching this thinking that I'm a doom monger, it makes me actually quite angry when I hear that, because what I'm here to do is to help people avoid it. Right? I'm looking at the facts. I'm not making wild predictions. I'm looking at the facts. Right? The ball is rolling. I'm just looking at the direction in which the ball is rolling. Something may come along and alter the direction of that ball rolling. It might be the crystal ball that's rolling, if you like. But until or unless something comes along, this is the direction the ball is rolling in, and people are at risk of losing their homes. And the more people I can get this message out to, the more people will have a better chance of avoiding the loss of their home. So what can you do about it if you're in one of those situations? Well, guys, not much conventional stuff, okay? There are people out there who have got savings, and if they end up in a situation where they can't afford their mortgage payment from their income, they're going to have to dip into their savings. And when you get to the end of the savings, though, then what do you do? Because nobody knows, including me, nobody knows how long this situation is going to last for, how bad it's going to be, how deep it's going to get, how long it's going to last. And if you look at the headless chickens running around in government at the moment, where is Liz Truss? Has anyone actually heard anything from her in the last 48 hours? Where is she? I heard a report on Radio 4 this morning that they're denying the fact that Kwasi Kwarteng and Liz Truss have had a massive argument in Downing Street, which normally means that someone's reported it. If you look at how fast things have unraveled in the last week, then it's not unreasonable to see that we're actually just at the beginning of this unraveling process. Now, I'm going to come back to the question about what can we do about this? What can be done to try and help people avoid losing their homes? But the first thing to do is look at what I think is the most likely scenario. My interpretation of the events of this week, if you remember on Monday morning I did say Armageddon, but this is, I have to say, this is even worse Armageddon than I expected. My interpretation is that the banking market, the mortgage market, the interest rates, which are now, I mean, people are expecting a 1% potentially interest rate increase. They're saying they're going to wait till next month. I'm not sure that they can. Let's wait and see. But maybe they will make it for next month. But because they are waiting for next month, and because nobody knows how much interest rates are going to go up until next month or until they do raise them, it's very hard for banks to set interest rates. And so I think we're going to see a massive withdrawing and reduction of mortgage products available until there is more certainty. And that certainty needs to be in the banking system, the interest rates, and government, because there is also a increasing by the hour possibility of massive political upheaval in the coming weeks, right? Massive political upheaval. Last night, the IMF, for its first time in its history, made a criticism and an observation of what a G7 country's done and outright criticized it and said that the government should reconsider its budget moves. I'm not making any opinion on that, other than to say it certainly adds to the political pressure that's going to happen. So uncertainty at the moment is going up, and I think it's going to go up a lot more in the coming days and weeks and months. For that reason, here is my frankly shocking, I mean, even 48 hours ago, I could not have imagined myself saying this. I think the housing market is going to grind to a complete halt until January. All right. Now we're only in September, but there's no improvement in the uncertainty levels until November. Right. No one knows what's going to happen with banking, mortgage products and stuff, interest rates until November. We don't get the Office of Budget Responsibility forecast. That's a separate point, until the end of November. And if it basically gets to December, no one's going to start re-engaging in housing transactions just before Christmas. Some will, a few will, but not many. So we're looking at January, I think, before the dust from this situation settles on the housing market and people can start to go, right, what is the new reality? Where are interest rates? What are the predictions for interest rates? What's the prediction for the economy? How safe is our job? How bad has the cost of living crisis got? All of these things need to be taken into account before the dust has cleared, the clouds have cleared, and we can see again what the future looks like. And until then, even if people want to keep on buying houses, you can't, because they've taken the mortgage products off the shelves. So it's not even the fact that people are going to sit on their hands through choice. First-time buyers, especially applying for new mortgage products now, are going to just get tumbleweed. There's going to be no response for some time. And so this is also going to have a massive impact on estate agency businesses. A massive impact. I saw a panicked statement from the chief executive of one of the biggest London estate agencies the other day, which is just, I actually know the guy. He used to be a client of mine years ago. It was shocking to see him coming out. And it's just panic because some of those big companies are going to see their pipelines collapse, right? estate agency pipelines, a lot of them, some more than others, but especially the pipelines that have been built on shaky high prices, are just going to collapse. I mean, there's no other word for it. And so a lot of large estate agency companies, I think this impacts smaller ones less. I think smaller companies are going to be able to react to this more quickly, smaller estate agencies, that is. But the big ones, reminds me of a story back in the 90s when the owner of Foxtons walked in when a similar crisis happened and just put his hand, he had a whole company meeting, the whole company in the room, put his hand down the middle of the room and said, half of you, you're all out of a job overnight, like that. It was just that random. So a lot of big estate agency companies are going to be staring down the barrel of that gun, which is only going to add to the turmoil of the existing pipeline of property transactions. Okay, because buyers and sellers are going to be ringing their agents going, so what's happening? What should we do? Is it going to go ahead? And you're going to see that people are coming and going. So that all adds to the uncertainty. And although it's really quite shocking to hear anyone saying this, this is my prediction. So far this year, my predictions have been worryingly accurate. I first called this out in February. In February, I said, it's looking like this year is going to have some bad stuff happen. It's looking like the possibility the conditions of prices falling is going to happen. In May, I rang the alarm bell on my estate agency channel on Best Agent and said, I'm calling it. There's going to be a house price crash. I said that in May. Here we are in September, and it's happened. I mean, it's begun. There's no two ways about it. There is, as we speak, a house price crash underway. We will not see it being reported in official figures for some months. But when they do come out, they will show that the house price crash started this week, right? The week immediately after that mini budget. So I'm sharing with you all of this. This is just my opinion, right? It's my relatively informed opinion. I'm sharing this with you to give you the information that you need to make the best decisions for your situation, because every single one of them is unique. Unless you're in a position where you're due to exchange today or tomorrow or the next day, or this week, then you've got a bit of time to think about this, right? If you're a first-time buyer that hasn't yet bought, I mean, you're just going to be stuck where you are for a while. But anyone in the transaction pipeline, anyone looking to sell or thinking about whether they need to sell or not, because perhaps the mortgage rate coming to an end means there's no way you can afford it, so you've got to sell. You need to understand, anyone that needs a transaction to happen, transactions are likely to suffer significantly between now and January. It's like a tornado coming through the house moving marketplace, right? That's what's happening right now. That's the best way of describing it. It's a tornado going through, I was already predicting a storm, right? It's been stormy for a while. It's now a tornado. That tornado is going to come through. It's going to tear through, and it's going to do some major damage to this industry. And we're going to see a big reset. I hate to use that word because of the World Economic Forum, but a big reset in the housing market. You're going to see a reset, a recalibration is a better word, a recalibration of house prices, a recalibration of mortgage prices, a recalibration of affordability, a massive recalibration coming for the buy-to-let market. All the yields in there are going to be just thrown into total turmoil. If you are currently in rented right now, you should actually count your lucky stars, to be honest, assuming that you've got a home that you like living in, because you've got reasonable stability there. If your landlord's saying that they want to sell to get you out, well, I wouldn't worry about that happening anytime too soon. Okay, it's going to take them a while to sell. There's just so much happening, and it's going to take so long, especially for larger companies, to just have time to digest the gravity and depth of what's happening. But it's happening, and it's happening now. What can you do about it? Right, I'm going to specifically aim this bit of advice at people who have just bought or recently bought and who are worried about being able to afford their mortgage. batten down the hatches, guys, is all I can say. Do everything in your power to protect your ability to pay your mortgage and to be able to absorb whatever increases are coming. One thing that you can do is to ask your mortgage company for, if you are on a capital repayment mortgage, not an, this won't work if you're an interest only mortgage, but if you are on a capital repayment mortgage, you can ask your mortgage company for a capital repayment holiday where you just pay the interest for a period of time until things get better. There's no guarantee that they're going to say yes, but most mortgage companies, if you listen to that Savills analyst, he says mortgage companies have no interest in repossessions. It's an absolute nightmare for them if it happens. And therefore, I think a lot of mortgage companies are going to be more interested in letting you keep your home and keep up your interest payments. If you're making your interest payments, then you are a performing debt, right? So a lot of them will do that, like they did in the pandemic. And in a way, what happened in the pandemic and the mortgage payment holidays that were agreed then was a great practice run for what may happen now. And I hope that the banks do agree to give capital repayment holidays wherever they can, because that will massively reduce the number of people losing their homes if there are enough people on capital repayment mortgages. But I think it's a lot of interest only, so it's not going to help you guys, unfortunately. So that's one thing you can do. There's a major, if you are looking at a situation where you're going to have to use up your savings to pay off your mortgage, then the question you have to ask yourself is this: do you have enough savings to ride out this nightmare and use up your savings paying your mortgage, right? Because if you don't, and if all of your, if all that's going to happen is you've got enough savings to just pay your mortgage for a few months, but then the end is nigh anyway, well, I'm not sure it's worth tipping your savings into that black hole. All right. I mean, guys, this is very unofficial kind of Armageddon advice. This is not going to be advice that is within the terms and conditions of your mortgage or anything. Okay, so I'm talking about doomsday scenario, right? If you are staring down the barrel of the gun of losing your home, it takes a long time. It takes a long time from when you stop paying your mortgage until the day that the bailiffs turn up and actually remove you. Like, it's, and don't forget, if the bank wants to repossess you, I mean, they have to get you out before they can sell it. I mean, I hate, the fact these words are even coming out of my mouth now is shocking to me to hear it. But if you've got enough savings to pay your mortgage repayments for a good few years, and you're confident that you're going to come out the other side and still be able to pay your mortgage, yeah, it definitely is worth using your savings in order to keep your house. But if you've only got enough savings to pay a few months of mortgage payment, I don't know, I'd probably rather keep that money for renting somewhere. So guys, I'm not sure what, mortgage misery is the title of this live stream, because I'm afraid it is just misery. There's no good news, right? We are at the start of a tornado going through the housing market, and what the housing market landscape is going to look like afterwards is anybody's guess right now. Anybody's guess. I can't make a prediction of what it's going to be like, because the political upheaval, the banking upheaval, the interest rates, the money markets, no one knows what's going to happen in the bond markets. What happens in the bond markets affects the government's price of borrowing, which affects all of our cost of living. It's as bad as it has been at any time since the 90s for me. This is much worse than 2008. Even though 2008 was bad, people lost their homes and people lost their jobs. I think this is going to be far worse. Okay, let's take a couple of questions. Is it too late to sell, says Lucy Humphrey on TikTok? In a word, Yes. But having said that, if you price it keenly enough that a cash buyer wants to buy it, you can still sell. Most important thing, if you need to sell, if you must sell, is do not go to some cheap, inexperienced estate agent. Do not make that foolish, false economy mistake. If you need to sell, find someone who will actually get you sold. And when you find someone you trust enough to do that, trust their advice and go along with what they say. And don't make the mistake of setting your price just a bit too high and the market falls and you're chasing it down. Don't be that dummy, all right? Price it to sell if you need to sell. Right, so what if you've just, someone's just said, we've just had a mortgage offer. Remember something, right? A mortgage offer is always subject to a survey on a property. So I'm afraid that mortgage offers right now, I think, are just probably, unless it's, if they've been out to the property that you've had your offer accepted on, they've done a survey and they've accepted the value of the property and given you the final offer on that and given it to your conveyancer to exchange, no, that's okay. You can still proceed with your purchase. But if you just have a sort of offer in principle or an offer subject to finding a property, I think the banks might be finding ways to back out of those offers. This is, all right, I am not a mortgage expert. I am not a mortgage expert. But what I do know is that the banks do what they like, right? They do what they like. And they will find ways to back out. And the terms and conditions of their offers will always give them a back out in the event of major market movements. But if you've got a mortgage offer locked in and it's an official one, and you've got, see, the get out of jail card, if you haven't yet found a property, is going to be, oh, well, no, we don't agree on the valuation of that property, because it's always subject to a survey. Mortgage offers are always subject to a survey, and the survey is where they can get out of jail free if they want to. Someone says, I'm renting, but I put an offer on a house yesterday that was accepted. By the way, that doesn't surprise me. I've had loads of people telling me, I just put an offer in way below asking price and it was accepted immediately. Well, there you go, guys. If you wanted any evidence that house prices are falling, sellers are accepting offers way below asking price every day because they want to sell. And those buyers that have been saying that have been saying, oh, Jojo, a mortgage broker, top tip is to insist on exchanging completion on the same day. Well, you can insist on it all you like. Doesn't mean it's going to happen. I mean, good advice, I think, Jojo. Someone is saying, is it better to remortgage, settle debts and ride it out? Well, if you can, yeah. If you are able to remortgage at a fixed rate for at least 5 years that you can afford, yes. That is what I would be doing, because then it gives you some certainty. Guys, the time scale of this, I mean, if you look back at 2008, house prices, I think, this could be wrong, it's from memory, but I think they took about 5 years to recover, to get back to the pre-crisis levels, at least. I think it was 5 years. You know, in the 90s, it was 89 until 94, 95, until they bottomed out. They took more like 10 years to get back to their prices, I think. But I don't know these prices off the top of my head. But you know, we're at the beginning of something that's going to last for, I mean, minimum 2 years, probably 3 or 4 years for the market to bottom out. So the reset that's happening between now and January is for the mortgage brokers and estate agents to recalibrate for what is a falling market, and is going to be a falling market for some time. Okay. That's why, and it's everything's got to be reset. So it's effectively as though, you know, if the housing market was a website and you went there today, you'd see a sign saying the site has been taken down for maintenance, we'll be back soon. That's kind of what's happening. I'm not saying all transactions are going to stop. That's not, of course they're not. You know, there are a lot of cash transactions. There are a lot of people, cash buyers and sellers. Those transactions are going to happen. Who knows at what prices? We won't see for a few months. But the mainstream. And all of you have been saying to me, house prices aren't going to fall because overseas investors are going to come in and buy. Well, they're not going to buy today. They're going to wait for this sharpest point of this crash, which is now happening sooner than I thought. They're going to wait for that to happen. They might start buying in January or February, and who knows how far prices will have fallen by then. We won't know, because in January and February, the prices being agreed won't be reported until June, July. All right. This is also going to be a major impact on the conveyancing industry. There's going to be a liquidity problem. Transaction volumes are going to drop. Not because people don't want to move, but because of this recalibration period just makes it impossible to move for a lot of people. I am sorry to be the harbinger of doom, and I do accept that you know, but when doom is what's coming, I'm sorry, it's not funny for people who's in the house, but when doom is what's coming, you know, you want to know, don't you? You want to know. And if you're an estate agent watching this, please stop telling your customers it's going to be okay. Please stop telling them that. You're not doing them any favors or yourself. Nothing about this is going to be okay for a while. Any other questions? Right, let's take some questions from YouTube. I haven't looked at it yet. I'll put them up on the screen. So new questions, please. Yeah, it's definitely going to be worse than 2008. In my opinion, I could be wrong. I hope I'm wrong, but I think it's going to be worse than 2008, Daniel Latimer. Why do I think homeowners and estate agents have been so slow to see what is happening? In a word, in a nutshell, it's because of the time lag on the transparency of what's happening. So the media only ever reports what's happening with official figures, and official figures have a 6-month time lag. So that's why homeowners and agents have been so slow to say. I mean, agents don't want to. You know, agents don't want to admit what's happening because of what it means for their businesses. But the quality agents, and please everybody remember that there are quality agents out there. It's only about 15% of them, right? It's only about 15% of them, but they are out there. They're often the hardest to find because quality estate agents don't need to go out with lots of loud marketing because they have a steady stream of referrals and recommendations from people who've used them, and that's enough for their business. They don't aspire to be number one in the market. They're just happy to make a great living helping a small number of customers, and that's why they're hard to find. But you need to go out there and find those good estate agents, right? They have been calling this for a while. And they've been mocked by other agents who go, oh, don't listen to those guys. Everything's going to be fine. If you're an estate agent that a few weeks ago was saying, nonsense, everything's fine, prices are still going up, shame on you. Shame on you. Like, literally, think about what your advice meant for those clients you were advising a few weeks ago. What does it say about your level of professionalism and knowledge in your job? Right? You just want, the information was there for all of you to see, okay? You just didn't want to see it. And you've been papering over the craps. Craps? Cracks, sorry. I don't do commercial. Please don't ask me questions about commercial properties. Nothing, I know nothing about it, and I can't offer advice on that. Let's get another question. Will having a lower loan to value still make getting a mortgage easier at this time? Of course. The lower your loan to value, the better your chance of getting a mortgage. I mean, I think one of them, Santander, has just said they've pulled, I can't remember which one it was in that Financial Times article, they've pulled their 85% and their 70% loan to value mortgages. So Dr. Chris 24 says, hi Charlie, offer accepted on a great house, 25k under asking price with a mortgage offer secured for 5 years, conveyancing done, continue or not? I'm in rented and relocating, so need to move. Okay, if having a home is more important than saving money and you are secure for 5 years, yes, still move. Your house value is going to drop probably, but it doesn't matter because you're in a home for 5 years. You won't be able to sell in that time, or you might do, but you'll be taking a big hit. So if you, I think there's a lot, I've had a lot of these questions just yesterday, actually. If you've had an offer accepted and you've got a 5-year mortgage and you're able to proceed and being in a home is your priority, yes, get into that home, right? You want to be in a home with stability. If you can afford your mortgage and it's fixed for 5 years, yes. If it's a 2-year, if you are about to exchange on a 2-year mortgage, If you're a buyer who's about to buy with a 2-year fixed rate, not sure I'd do that. Not sure I'd do that. I would be very worried about that, because remortgaging 2 years from now is going to be a lot more expensive, almost certainly, and you won't be able to sell. So if you are about to buy with a 2-year fixed mortgage, so AA, I'm answering your question, right? You've got a 2.6% rate. That's a great rate. 200k mortgage, interest only, but 2 years. You will have to, your mortgage payments is likely to go up, possibly double 2 years from now, and you won't be able to sell 2 years from now. So only buy AA if you can afford a mortgage rate that could well be more than double what you've agreed now 2 years from now, because you will not be able to sell 2 years from now at a high enough price to pay off your mortgage. Geez, sorry, the questions coming in so thick and fast. Someone just said, you're just going into estate agents in the UK right now. Is that a bad idea? No, it's a good idea, right? Because you don't have a pipeline that's about to collapse. You set up your agency now, provided you pick and choose your clients very carefully, which is realistic clients you're prepared to sell, and you can find cash buyers and you get good instructions and good prices. It's a great time to start out as an agent. AA, it's a remortgage. Okay, I can't really advise them without knowing exactly what the figures are, what your mortgage loan to value is, that kind of stuff, what the value of property is right now. But I would be remortgaging at 5 years, not 2 years right now. I mean, unless you want to lock in 2.6% for 2 years and accept a bigger increase in 2 years' time. Let me look at another question here. Louisa X, I submitted an offer this week and the vendor hasn't responded to any offers yet. I offered asking price and now feeling concerned about the decision. Yes. It's hard to know, Louisa, because I don't know what your mortgage situation is, or whether you're a cash buyer or not. So I need to know, if you've got a question, I need to, are you a cash buyer? If not, are you a mortgage buyer? How long is the mortgage offer that you've got? If you're making an offer on a property without a mortgage offer in place, well, I mean, I just forget about it. Someone says, hi, Charlie, 1/3 of sales. So this is Rum Shop HQ. 1/3 of sales fall through in normal times. What do you think the percentage will be now? On Monday, someone asked me that question, and I said about 2/3. I would say now that you're looking at 75 to 80% of deals falling through if they're based on mortgages. Cash deals without mortgages are less likely to fall through, but they're almost certainly going to renegotiate. If you are a cash buyer, there's a question from Musa Gondal. What's the best time for a cash buyer to buy a house in these hard times? Wait till the bottom of the house price crash is the best time. If your priority is based on price, wait until at least January, and there'll be bargains galore to be had. If you need to buy a home and you're a cash buyer, you can still go ahead now. Make your offer. What would I be offering below asking price? Okay, based on asking prices that you see out there today, if I was a cash buyer wanting to buy a home, I'd be offering 25% below asking price, at least. That's just me. I'm not saying that's what you should do. That's what I do. Oh, Adam Priskak. I've just started an estate agency 3 months ago in sales. No exchanges yet. Fall through rate about 40% at the moment. Okay. Any tips? Don't take on sellers that aren't going to be realistic and waste your time. Like literally, disinstruct yourself from clients that aren't wasting your time. But take on good instructions at a good fee that you know are going to sell. Look for quality, not quantity. Yeah. Interest rates are okay. So as of yesterday, interest rates are base rates, not mortgage rates. Bank of London base rates are forecast to be 6% a year from now. So mortgage rates 8% a year from now. You know, but who knows? That could go up. It could go. It's horrifically uncertain. Guys, that's enough bad news from me. That's 40 minutes of doom. I'm not doom mongering, but I am a harbinger of doom. I accept that. I think okay. Someone's saying, do I think the crash will be around 25%? No, I think it's going to be around 35%. A week ago, I said 25%. That was before the budget. That was before the political and financial turmoil we've now got. I now think it's going to be 35%. So many questions, guys. So many questions. I need a break. I've got other stuff to do this morning. I homeschool my kids, by the way. I'm in London, got one of the kids with me. I've got some other things to do, but there are understandably a lot of questions coming from you guys. So I will wrap up with this. The dust is not going to settle till at least January. If you are buying or remortgaging now, you need, with a mortgage, not a cash buyer, do not consider 2-year mortgages unless you are sure you'll be able to afford the increase 2 years from now. You need at least a 5-year fixed term. If you are a cash buyer, I will be offering at least 25% below current asking prices. And if you are someone who's facing a forced remortgage because your fixed rate's coming to an end, move as quickly as you can. Ask for a capital repayment holiday if you can't afford your mortgage. If you've got a spare bedroom in your house, you can rent it out. I would be looking at that. That's another thing I'd be doing. But there you go, guys. Forewarned is forearmed, I hope. I hate to be the bearer of such gloomy news. Best of luck, everybody. I will do another live stream just to take questions as soon as I can. So I'll do a Q&A live stream on YouTube and TikTok simultaneously as soon as I can. I don't know when that's going to be. I'm getting bombarded with questions. I have now reached the point where I am failing to keep up with the number of questions that I'm getting from you privately. I'm trying to figure out what to do about that because I want to help as many people as I can. One more question, Wilson Property. This is a good question. Can you please play devil's advocate on the best case scenario of the next 12 months? Do I want to consider the possible good case scenario? That is a very good question. I haven't been asked. What do I think is the best case scenario for the next 12 months? Well, this is on the fly. I've had zero time to prepare for this, but I'll give it a shot. My best case scenario is that the Bank of England and the government pull out all the stops to calm the fears in the money markets and bring back stability and confidence from the banking sector and the money markets as fast as possible, and to settle the nerves and calm the nerves. That will allow the banks and the mortgage companies to quickly recalibrate and bring their mortgage products, such as they will be, back to the market, and allow the property market transactions to resume in whatever the new normal is going to be. I still call it January, the earliest for that to happen. If they can pull that out of the bag, then best case scenario is what I've been asked, right? Best case scenario, we're looking at 20% price falls. Best case scenario. And for the world to and this will be good for people in negative equity as well, because the negative equity will not be as bad as it will be if it goes to 30-35%. And best case scenario on interest rates is if inflation levels off and starts to come back down again quickly, which, by the way, is unlikely even a good case scenario, because they're going to have to keep interest rates high to prop up the pound to keep the money markets happy. So interest rates high, that will bring inflation down. So if they manage to get inflation under control within a year and interest rates stop spiking, best case scenario mortgage rates a year from now, I'm guessing, guys, I'm guessing 4%, 5%, best case. But I'm not confident in that best case. Right, so a big CEO has just predicted 20% reduction in UK property values on Bloomberg this morning. Welcome to the party, guys. I don't understand why more people are more confident to come out publicly and say, hey, it looks really bad. The people who know that it's been bad for a while have not been saying it. I don't understand that. Right, I must go and take care of my charge and wish you all the best of luck and see you on the next one. Good luck, everybody. Stay strong. Keep calm. Figure it out. See you on the next one. Bye-bye.